What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame, got mortgages. Was holding on shooting this for quite some time because I was really waiting on what was going to happen really today, a couple hours ago, in regards to President Trump's tariffs and everything that impacted. But before we dive into that, as always, I do like to kind of talk about what happened the prior week, right? Last week was the important data report that we got on inflation. I'm going to go ahead and share my screen, and then we're going to talk about even further one of the biggest impacts, right, from the PCE report. Okay. So, starting up from the top, we can kind of see here again the Federal Reserve's favorite measure on inflation, which was the PCE report, actually ticked up, right? Ticked up just a shy of a headline number of 0.3%. And then on the core, a little bit of a jump up of a 0.4%. Some of the main factors that influenced this were really a big portion of it was shelter costs, right? That was the idea. Slowly weaning down, but kind of showing a little bit of a really catch up as to what we wanted to see. A big portion of us, it was cost of healthcare, utilities, and software company for computer software actually rose a little bit higher than we wanted, which kind of contributed to some of the factors. Now, again, the most important bottom line for us to look at is that remember, this data is based on 12 months. We are replacing past data that was significantly lower. So again, looking ahead, April through December are very low inflation numbers. So kind of an important part for us to keep an eye out. We really want to hit that target of 2%. We do also, though, although some of this worry, consumer spending was actually starting to decline, right? We've got inflation that's still remaining a little sticky. And then we have high credit card debt, obviously playing a major role in regards to that. New home sales did bounce up, as we can see here, right? As 676,000 contracts, uptick of 5% year over year. Median home price at 415, basically the average of the higher price relative to the more affordable homes. Again, inventory still in this case plays such a major role when we talk about buyer demand and we talk about really obviously the tightness on supply. Pending home sales, we also see a little bit of an uptick, right? Up 2% month over month. Current sales aiming for about 4.26 million. Again, bottom line, rise in signed contracts, of course, that we're seeing is obviously putting things in perspective as to where we need to be when we look into the continuing months, right? Usually on the really East Coast side, right? Normally we start warming up, right? Spring and summer market happens to be our busier times. If we kind of take a look at where we're at nationally, home sales on a month-to-month basis jumped up 0.6%. Year over year jumped up 4.1%. Again, continuously showing home prices continue to appreciate and jump up in value. If we take a look at the 10 city, we'll see a little bit even higher of a 5.3% year over year. Okay. Additional things for us to look at again this week, we know is the employment data week. We got updates on the job opening and labor turnovers, which came in under expectations. ADP report actually came out, and that came in slightly, a little bit, really, kind of within the lines of what we wanted. Right now, the biggest thing I wanted to talk about with us was about tariffs. Right, tariffs. Of course, President Trump came out and really dove even deeper in regards to signing the aggressive tariffs. But I wanted to do truly a complete overview of how tariffs really impacts the market, really in an expectation for us to truly kind of get a firm understanding as to how is it that tariffs are going to play a little bit of a role when we take a look at obviously the market, right? So a couple things, right? Tariffs and inflation. So tariffs are basically taxes on imported goods. It eventually leads to higher costs for businesses and consumers, which does push up inflation. Of course, the Federal Reserve's role at the end of the day is to keep a stable economy, keep a stable GDP, keep a stable impact on inflation. So what they may necessarily do is raise interest rates, right, which is the benchmark overnight rate for banks based on their federal funds rate. Impact on mortgage rates, again, higher interest rates generally means higher mortgage rates. Lenders, of course, would obviously have to increase their rates to accommodate. Right now, we're at a point of uncertainty, right? As we're starting to see a lot of the stock market really take a hit, as the stock market takes a hit, that of course makes a retreat for investors to actually invest some of their funds into the bond market. So you'll see here the extent to which tariffs will impact mortgage rates is uncertain, as it depends on various factors, scale and duration of the tariffs, other factors, economic factors, consumer confidence, overall health of the economy can influence mortgage rates, potential for lower rates. So like I said, investors may necessarily flock to safer assets like U.S. Treasury and 10-year Treasury and kind of take it from there. We'll kind of see a little bit of how that impacts it, right? And see. Now, other important data for us to take a look at, like I said, ADP report, which is the private payroll sector, that showed we were expecting 105,000 jobs from the revision. It actually came in a little higher, right? 155,000. The market didn't really react to that data, which was really interesting. We did see also that the wages is up 4.6% on an annual basis. Bottom line, again, the jobs were a little stronger. Wage pressures did accelerate. Bonds, again, are focusing more on the slower of the economy and really the slower of the tariff. So, important for us to obviously take a look at. We do see here that mortgage applications are up 2% on a purchase and, of course, up 57% on a refinance. We've got a good number of refinances currently happening right now for our clients, really from cash out refis to bank statement HELOCs to regular HELOCs, a lot of different overhead resistance, right? For us to kind of take a look at, try to get as creative as possible for our clients and our investors. Appreciate you guys jumping on. Later on Friday, we're going to get the big BLS report, Bureau of Labor Statistics, that measures non-farm payroll. Let's kind of see how that impacts the market. What are some of the qualification standards for us to really kind of see, are there any potential upside, right? And elimination of risk for us to kind of continue seeing a little bit of the market bouncing back. Appreciate you guys jumping on. As always, I'll make sure we keep you guys updated, of course, with any updates. Make sure you keep an eye on our reels or visit our website, gotmortgages.com. Talk to you guys soon.